You know that feeling. Trying to keep up with everything, the news, opinions. It's just information overload.
Absolutely. It's everywhere.
Headlines, articles. It can be overwhelming. So that's what we do here at the Deep Dive. We try to cut through that noise, take a good look at what's important, pull out the key bits so you get the real picture without feeling, swamped.
Exactly. And today we're diving into something that's really making waves globally.
Yeah.
This escalating trade war between the U.S. and China, mainly. But it's wider now.
Right. You see the headlines, but it's hard to grasp the full impact.
Well, we've got this really useful blog post dated March 5th, 2025. It lays out the recent tariff hikes, the market reactions, and what it all kind of means for the global economy. And maybe for you, indirectly.
So the goal is to unpack that, get to the heart of it.
Precisely. Cut through the complexity, see what's really going on and why it matters.
Oh, great. And we've got our expert here to help us navigate all these connections.
Happy to be here.
Okay, so let's jump in. This blog post, it really emphasizes how this whole trade thing has ramped up. It mentions way back in 2018.
Yeah, that feels like a long time ago now, doesn't it?
It does. The U.S. had already put tariffs on, $250 billion of Chinese goods?
That's right. But that was just the start, really.
Seems like it.
Yeah.
Because the post talks about more recent stuff.
Exactly. What's really changed is the scope. Now we're seeing U.S. tariffs on goods from Canada and Mexico, too.
Our neighbors. Wow.
Yeah, and it's a huge amount. Over $918 billion in imports from just those two.
Okay, that's massive.
And on top of that, the U.S. also upped the ante on China, raising tariffs on a bunch of goods from 10% up to 20%.
20%? That's quite a jump.
It is. It's a significant increase.
And I guess China didn't just take that.
No, not surprisingly. The blog notes, they hit back pretty fast. 10 and 15% tariffs on key U.S. farm products.
Like what?
Soybeans were mentioned specifically.
Yeah.
And chicken. It's this quick tit for tat, and it feels like it's accelerating.
Wow. So it's not just U.S.-China anymore.
Not at all. And the impact wasn't just contained there, either. The source really stresses the immediate ripple effect. Global markets reacted.
How soon?
We saw drops in major Asian stock indexes. Japan's Nikkei, Hong Kong's Hang Seng, they both dipped.
And those indexes, they're sort of like barometers for market health.
Exactly. So a drop signals worry among investors, concern about how this trade fight could hurt those economies.
It really shows how linked everything is, doesn't it?
It really does. Actions by just two big economies can send ripples worldwide almost instantly.
Okay, so tariffs increase, retaliation happens, markets wobble. But what's the real-world effect for, the economy, for people? The blog post mentioned some pretty big consequences.
It does. And thinking bigger picture, the main worry is probably consumer prices.
Things costing more.
Yeah. When imported goods get hit with tariffs, those costs usually find their way to the checkout counter. So you could see price tags going up on all sorts of things.
Okay, that makes sense.
Plus, the Tax Foundation did an estimate. They figured these tariffs on Canada, Mexico, and China could each shave about 0.1% off U.S. economic output.
0.1%. Sounds small, but I guess it adds up.
It does. Think about a huge company losing 0.1% of revenue that's real money. Across three major partners, it becomes a noticeable drag on growth.
And it's not just about prices, is it? The Post also mentioned worries about jobs.
That's a key concern, yeah. If businesses suddenly face higher costs for materials or parts because of tariffs...
They might have to cut back somewhere.
Exactly. They might look to reduce costs, and sometimes that means cutting jobs, unfortunately. And the Post also flags these big supply chain disruptions, especially hitting sectors like automotive and construction.
How so? Like parts for cars?
Right. Tariffs on imported car parts or tariffs on lumber from Canada for building houses. Those directly hit those industries.
And the people working in them.
Precisely.
Now, speaking of specific sectors, the blog post really zooms in on agriculture. Soybeans, especially. That seems like a major pain point.
It really is.
Why soybeans? What's the big deal there?
Well, historically, soybeans were a massive U.S. export to China, a huge part of that trade relationship.
Oh, okay.
So when China slaps retaliatory tariffs on soybeans, it hits American farmers hard. Very hard. They relied heavily on that market.
And the Post mentions this happened before.
Yeah, it reminds us that back in 2018, U.S. soybean exports to China just plummeted, dropped by half, 50%.
50%? Wow.
Yeah, because of earlier tariffs. So this latest round, it's likely making that problem even worse for farmers.
So what do they do, the farmers?
It's tough. They have to scramble to find other buyers, maybe plant less. It puts them in a really difficult position.
And it's not just the farmer who gets hurt, is it? The Post implies broader impacts.
Oh, definitely. It ripples out. Think about the companies selling seeds or making tractors.
Right.
And even just the general economy in rural areas that depend on farming. It hits them all.
And globally, does this change things?
It does. The blog points out a really interesting shift in global supply chains. Other countries, like Brazil, are stepping up to fill the gap, selling soybeans to China instead.
So Brazil benefits from this.
In a way, yes. They'd already been investing in things like ports and building ties with China, so they were kind of ready to capitalize when the U.S.-China tensions flared up. It's literally redrawing trade maps.
So U.S. tariffs, Chinese retaliation, then other countries jumping in. It's like a domino effect.
A very complex one, yeah.
And the retaliation isn't only from China, right? The Post mentioned others.
That's right. It's gone beyond just a bilateral dispute. Other nations are involved now.
Like who?
The blog mentions Canada's Prime Minister, Justin Trudeau, promising 25% tariffs back on U.S. goods.
Okay.
And Mexico's president, Claudia Sheinbaum, basically said they have plans ready to counter U.S. tariffs too.
So Canada, Mexico, China.
And China's new tariffs on U.S. farm goods were set to kick in right after this post was written. It's an ongoing, evolving situation.
It really feels like we could end up in a scenario where, well, everyone's tariffing everyone.
There's a real concern about that. The Post even quotes an economist, Diane Swank from KPMG.
Yeah.
She warned we could hit the highest effective tariff rates since, wait for it, 1936.
1936? Wow, that's sobering.
It is. Like a historical echo you don't really want to hear.
And these tariffs, they don't just hit one thing. They spread out.
Right.
Through different parts of the economy.
Exactly. It's a cascade. The blog gives examples, like the auto industry.
Right. We mentioned parts earlier.
Yeah. Higher costs for imported parts, materials. That could easily mean higher sticker prices on new cars.
And housing, too. You mentioned lumber.
Mm-hmm. Tariffs on Canadian lumber. The Post estimates that could add like $7,500 to $10,000 to the cost of a new single-family house.
$10,000. That's huge. That could price people out of buying a home.
It absolutely could. Or make renovations much more expensive, yeah.
And tech. What about electronics?
Same story, really. Higher costs for components used in smartphones, computers, all that stuff.
So potentially slowing down new gadgets coming out.
Yeah.
Or making them pricier.
Both are possible. And what's really interesting is how this pressure, it's forcing companies everywhere to rethink things fundamentally.
Like where they get their stuff from.
Exactly. Yeah. Where they source materials, where they manufacture. Some might even move production to totally different countries to try and dodge these tariffs.
That sounds like a massive undertaking.
It is. And technology, like advanced analytics, can actually help here. Companies can model different scenarios, find alternative suppliers, try to soften the blow.
So it's not just about paying more at the store. It could actually shift global manufacturing.
Potentially, yes. Over the long term.
And agriculture.
Right.
It wasn't just soybeans, right?
Yeah.
Other farm exports are affected.
Yeah, the impact's broader. Pork and beef exports are also getting hit by retaliatory tariffs from Mexico and China.
What does that do?
It can lead to too much supply here in the U.S., pushing prices down for the farmers, which sounds good for consumers maybe, but it's bad for the producers long term.
And dairy.
Dairy, too. They were already facing low prices, and now tariffs on exports to places like Mexico add even more pressure. It's tough across the board for many farmers.
Man, it just sounds like the whole global trade system is really strained right now.
It is.
And the blog post suggests this might be part of a bigger shift, maybe away from free trade towards protectionism.
That's a key point the Post raises. The U.S., traditionally a big advocate for free trade, seems to be pulling back a bit.
Why?
Citing national security concerns, unfair trade practices by others. That's the official reasoning.
And other countries are reacting.
Yeah, what's significant is that other nations are also rethinking their own policies, maybe looking at more protectionist measures themselves to protect their industries.
So less global cooperation on trade.
There's definitely more uncertainty around those big international trade deals, like TPP or even the newer version of NAFTA. The whole landscape feels less stable. It's moving from just bilateral U.S. versus China to multilateral actions.
Okay, so there might be arguments for tariffs, protecting local jobs or industries.
Right, proponents make that case.
But the blog also points out the risks, right? The downsides. It's a tricky balance.
It's incredibly delicate. Because while tariffs might give a short-term shield to some domestic industries, Most economists worry about the long run, less efficiency because there's less competition, higher prices for consumers like we talked about,
and slower growth overall.
and potentially slower overall economic growth for everybody. The IMF, the International Monetary Fund, they've flagged these trade tensions as a major risk to the global economy.
And so interconnected. Now, this blog post we're using, it's from Pharmanon, right? An agricultural tech company.
That's right.
So it's interesting to think about technology's role in all this. Can tech help navigate these trade problems?
That's a really relevant angle. And yes, the post suggests tech can offer some tools.
Like what?
Things like advanced data analytics, AI. They can help companies optimize their supply chains.
Oh, finding better routes.
Yeah.
Managing stock.
Exactly. Finding efficiencies, maybe cutting transport costs, managing inventory better when these are unpredictable. And it also mentions blockchain.
Blockchain. For trade.
Yeah, for transparency, making it easier to track where goods come from, which is really important with complex changing regulations.
Okay. And Pharmanon specifically. What do they do that helps farmers dealing with this?
Well, their tech focuses on agriculture, satellite imaging to monitor crop health, AI giving advice to farmers.
Advice on what?
On making better decisions, basically. What crops to plant, how to use water or fertilizer efficiently, even marketing strategies.
So using data to farm smarter.
Precisely. If farmers have really accurate data about their fields, their potential yield, they can optimize things. Cut costs, maybe find better markets even when trade is disrupted. The post mentions their web and mobile apps as the tools for this.
So technology isn't like a magic wand to fix the trade war.
No, definitely not.
But it can give farmers and maybe other businesses tools to adapt, to be more efficient, more resilient.
Exactly. It helps them cope with the uncertainty and try to build resilience in a pretty challenging climate.
Let's circle back to the consumer impact for a second. We mentioned higher prices. What else might we notice?
Well, besides potentially paying more, we might also see just different stuff on the shelves.
So,
as companies shift their supply chains, maybe certain imported goods become harder to find, or maybe there's just less variety available.
Okay.
And the blog also hints that consumer behavior might change. If prices go up enough, people might buy less or look for cheaper alternatives. Maybe even switch to more domestically produced things if the price gap narrows.
It really drives home that these big trade policies have real, everyday consequences.
They absolutely do.
And it sounds like businesses and industry groups are definitely watching this closely and speaking out.
Oh, yeah. The post mentions groups like the U.S.-China Business Council voicing concerns, saying these tariffs hurt U.S. firms, consumers, farmers,
and retailers.
The National Retail Federation, too, warning about higher prices on basic household goods because of the tariffs on Canada and Mexico.
But the government has its reasons, right?
Yeah.
Or justifications.
Yes. The post notes the government's stated reasons: national security, illegal immigration, drug trafficking. Those are the justifications often given for the tariffs. So there are definitely competing arguments and ongoing debate about whether these policies work and what the true impact is.
So looking forward then, what does the future of international trade look like according to this blog post? Is it just more tension?
It suggests we're likely looking at a significant reshaping of those global supply chains we talked about.
Companies spreading their bets, not relying on one place.
Exactly. Diversification. Trying to reduce dependency on any single country. We might also see regional trade blocs becoming stronger, countries trading more with their neighbors as a safer alternative to complex global deals.
And technology's role.
Still crucial, increasingly vital, the post argues, for navigating all this complexity. Companies like Pharmanon, offering specific solutions for key sectors like agriculture, become even more important.
The blog post actually included a table, didn't it? Kind of a before and after snapshot for different sectors.
Yes, a useful comparison. It looked at estimated trade values, pre- and post-tariff, and the percentage change. Covered agriculture, specifically soybeans, manufacturing like steel and aluminum, tech like electronics, and general consumer goods.
And what did that table show? Any standout points?
What really jumped out was the hit to agriculture. Soybeans showed the biggest estimated drop in trade value by far.
So farming is really feeling the brunt of it.
It seems so, at least based on those estimates. Other sectors saw declines too: manufacturing, tech, consumer goods. But agriculture, particularly soybeans in this phase, looked like it was facing the most significant negative impact.
Okay, so if we were to boil this whole deep dive down for everyone listening, what are the absolute key takeaways from this blog post?
Right. I'd say number one, we're seeing major disruption. global supply chains, trade patterns.
Yeah.
They're being seriously shaken up.
Okay, disruption.
Number 2. The impact on agriculture, especially U.S. soybean exports, is substantial, really significant.
Got it. Ag impact.
3. This could lead to long-term shifts in how major economies relate to each other, reshaping international economic ties.
Long-term shifts.
Okay. And finally, number 4. Technology is playing a critical role, helping businesses adapt, navigate the challenges, maybe mitigate some of the damage.
Technology is an adapter?
Right.
Those feel like the core points.
It's definitely a lot to take in, a really complex, constantly moving situation.
It is.
And it just highlights how interconnected everything is. You know, the global economy. Actions over here have big effects way over there.
Absolutely.
It makes you think how these huge shifts might ripple down and affect your own life, maybe in ways you don't expect, as a consumer, or even in your job if it connects to global trade somehow. Which leads to a good question to ponder, perhaps. As these global trade patterns keep changing, what new opportunities or maybe unexpected challenges might pop up for individuals, for businesses, maybe in sectors we haven't even talked much about today?
That's a good one. Or maybe, given all this complexity and tension, what role do you think international cooperation could play or should play in shaping whatever comes next for global trade?
Lots to think about.
Definitely. Well, thanks for taking this deep dive with us today.
My pleasure.
Until our next exploration.